Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and before we get into today, if you want to play Camel Finance Bingo, then make a note of this and join in. I'm seeing an awful lot of this stuff going around at the moment, and I don't care, right? As always, I don't give my energy to any of this stuff. I don't really think that's a productive use of time. But I will say this, it does feel an awful lot like they are they're getting ready to hand this over to a new person, whoever that person may be, and then blame the biggest crash and downturn and recession that we've seen in a very long time, and perhaps even a deflationary bust, on whoever it is that has taken the reins, so to speak. And I think we're seeing this around the world. We're seeing in places in Europe, they're calling elections early, and the whole thing to me just reeks of handing it over to a new person, crashing the economy, or not even crashing it, just allowing it to have the recession that seems to be near certain at this point, and then pointing the finger and say, yeah, it was all their fault, right? And the truth is, traders and people that are financially literate, they know that that's not the deal, right? They know, but average Joe public will forever remember whoever takes the reins as the person that ruined the economy and caused a recession, because they don't understand how things, develop, how long it takes to build up, and how long economic changes take to present. So anyway, I thought I would share that. That's certainly how it feels to me. It feels like they know it's coming, and all around the world, they're getting ready to sort of pass the government on to some new guy, and then blame whoever that new guy is for causing a recession. So yeah, it's going to be interesting to see if that's the case. At 1:30 UK time today, we have got US PCE data scheduled to be released. So it's going to be really interesting to see if this indeed comes in colder, right? If I am correct in my assessment and that inflation is actually not sticky like the average market participant believes, if I am correct that we are on our way towards deflation, in fact, asset price deflation, and between the two, we've actually got a continuation of disinflation, then should we not expect this data to come in cold, that is to say, below the prior readout, below the expectation today? I think we should. Now, whether or not it actually comes in cold is, of course, to be determined. And if it doesn't, then I will likely have to hold my hands up and say, okay, maybe everyone else is right about inflation being sticky. But if this data comes in cold today, then all I can really say is normal and to be expected, at least based on the analysis I've been conducting. And it's going to be interesting because, of course, if the inflation data today comes in colder than expected, then that gives the Fed, quote unquote, more credibility to say, we did it. We tamed inflation. It's moving towards our 2% target. Maybe we can think about cutting rates. And again, a lot of people are not really willing to accept that rate cuts might be coming. But if they are, that makes sense as well based on the bond market, based on everything else I've been presenting for a long time now. So it's going to be an interesting print for sure. Needless to say, I will cover it tomorrow in the weekend's deep dive. And there are still plenty of signs, as far as I can tell, to suggest that a recession might be quite close. And Walgreens stock, for example, crashed 25% after they said that they had a challenging consumer environment. They assumed the consumer would get somewhat stronger, but that is not the case, according to the Walgreens CEO. So again, I've been making this case over and over again that if the consumer is not in good shape, then we probably are going to see a recession. That, of course, again, is to be determined. Pending home sales, also dropped minus 2.1% month over month in May, slicing below the April 2020 recession low. So that's not nothing either. And meanwhile, we have a yield curve, the 10-year minus the 2-year, perhaps looking to replicate what we saw in 2020, a fake breakdown followed by a reversion. And of course, those reversions are synonymous with recessions. Have we just had this fake breakdown and are we now about to see that reversion? If so, again, kind of suggests that a recession might not be too far away. Over in the world of Bitcoin, I am still waiting to see, as are all of us, whether or not we have got a Dalai Lama. I saw a lot of people celebrating slightly early as of yesterday, and we are still susceptible to an undercut of that low. But as it stands, we haven't done it yet. So this Greek letter mu pattern that you can see developing here, okay, that is still what I am expecting and hoping to see. And if I hop into a Bitcoin chart, let me get a clean one. You can see so far, so good, meaning we're still holding above that low. Again, we are still susceptible to undercutting it one more time, but more or less, we are seeing that Dalai Lama come out of here, and all we need to do is break out this downsloping red resistance line to have truly confirmed that that indeed was a day 54 cycle low. So unless we undercut that low, okay, then that is indeed a cycle low, particularly if we break out, that fully confirms it, and then the question becomes, okay, as always, same question, different day, right? Do we come swinging out of here? Does left translation get put back on the table? Or instead, are we going to need to undergo another consolidation cycle that looks something like this, 60 days, okay? And then at that point, who knows, right? Who knows? But as ever, we'll take it one day at a time. It's no point me trying to guess. It's no point anyone pretending like they know. I've seen a lot of people say things online like, it's going to 30k camel. And it's funny because my default answer to this now is, okay, short it then, please. And then suddenly they have nothing else to say. So it's pretty funny, right? If you think it's going lower, short it. But the same people that seem to be calling for lower prices don't want to short it either. So I think that says something. As I was saying, there's work to do because we could certainly do something like this, reject and roll over. Okay. We could even, of course, do something like this and then fail the cycle later in life. And then that would be very bearish as well. As I just said, we have to be open to another 60-day consolidation cycle. I don't want to see that personally, but also get a breakout and a strong push off here. Okay. And Bitcoin will keep doing Bitcoin things. And I don't think many people will be ready for that, let alone be able to capture it. Again, I say a wild time to be alive. Also, take a look at this, okay? Because the current Bitcoin range that we've been in for quite a few months now looks very, very similar to the conventional labeling of Wyckoff reaccumulation trading range. Now, full disclosure, I don't know if the volume profile matches, and volume is incredibly important for Wyckoff. But we can look at this right-hand schematic and say that when we compare it to the left, it looks awfully similar. We also know we've got a cycle low in here any day now, if it's not already in, which it might well be. And all it would take is for us to come out of here swinging. That would also be the third and final angle note. Again, I often say this, right? If we were to fast forward to here, would we be able to look left and say that was kind of obvious in hindsight? I think so personally. This occurred on a lot of fear. This was right in the timing window for a cycle low. We had a big range and consolidation into that cycle low. We saw the daily RSI and other timeframes as well get record oversold. And by that, I simply mean down towards levels that we have not seen since prior major lows were formed, and very good things happened to the price of Bitcoin thereafter. So I do think that something like this could well be in play. As ever, one day at a time, we'll see what the market can give. And speaking of oversold, okay, speaking of the RSI, it's rare to see an oversold on the daily for Bitcoin. It's actually only happened 40 times in the past 14 years. But when we combine that with hidden bullish divergence, it's even more rare. This is actually only the third time in Bitcoin's history that it's happened. Happened once here in 2012. Price made higher lows, or oscillators made lower lows. Saw the same thing in 2013, okay? And today, so far, we've got the same thing in play with, again, that 30 level of RSI on the daily. Tells us to keep an open mind about seeing higher than expected Bitcoin prices walking forward. Meanwhile, the stock market continues to climb a wall of worry. It continues to move higher in the face of a whole heap of reasons for it not to, seemingly. NASDAQ as well, still looking quite blow off toppy, as is the Dow starting to push off now as well. Russell 2K still refusing to move higher, but maybe that is coming any day now. We're going to keep tracking it. No change from the precious metal markets, really. Okay, we are still seeing the weekly cycle down for about another 2 weeks. And then I think some opportunity is coming there, particularly if you're in the level 3 members. Notice how the dollar still moving higher, right? Still moving higher. Is this deflationary bust stuff? I don't know. We're going to find out. Yields setting up for that counter trend bounce before the final leg lower, I would think. And of course, if this happens, then again, perhaps on a backdrop of softer PCE data today, we might, just might, be setting up for rate cuts ahead of what a lot of people are expecting. And as I said, Bitcoin, okay, Bitcoin only really needs to break out and start to move up, set that third and final angle, and then I can sit back and say everything has been going according to plan. This is really not a popular idea. It wasn't that popular for a long time, and then in here it kind of became consensus, so it made sense. We had to shake a bunch of people out, and right now it seems to be the least popular idea out there. But that is personally how I like them. I like them to be unpopular. I will say this as well, the crypto-related equities, a lot of those look very, very bullish. A lot of those seem to think that this is what's coming next. And I do wonder if that's a leading indicator for Bitcoin. So that's going to be interesting. I'm also seeing a lot of people say that the alts are holding up quite well. And that's half true, right? Because the alts got destroyed ahead of this move down for Bitcoin. Then Bitcoin kind of moved down and the alts had already declined significantly and found bottoms. And now some of them, I believe, are leading the way up. So it is indeed a wild time to be alive as always. As ever, we'll just keep taking it one day at a time, okay? We know where our invalidations are. I still think we can't really celebrate the Dalai Lama or the cycle low being in until we've broken out of that red trend line. But once we can do that, then I'm pretty sure it should be on, at least in the short term, for some relief and hopefully for a little bit more than that. If you are a level 3 member, make sure you check out the members only video tomorrow. And for everyone else, please do come back and check the deep dive that I'll be going through, which will include the PCE data for today. Other than that, I hope you have a fantastic weekend. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.
Camel Crew, come close. It's that time again. People losing their minds, calling for the world to end. Sudden trend line break, just to spook you out. If it gets to you, maybe go fishing for some trout. Touch grass, relax, at least wait for a daily close. Keep your marbles intact, appreciate the cycle lows. Manage your risks, set stocks, let time just do the rest. Meanwhile, look forward to another Camel Finance episode to distress. Ask your partner to consider your privacy. Just don't mention your love for charts, will be seen as rivalry. Devote yourself to the cycles, treat them as your muse. At some point